Hi guys, today we will discuss intraday OBV trading techniques. Now, as you know, OBV trades on volume, so it helps you learn what the volume is saying, where the smart money is going, what really is happening. Now, always remember, whenever the volume is above the average and the average is turning up, it means accumulation is starting. It doesn't mean that it is accumulated. It means that someone has started buying it. And if you have seen major players, you would know that they are not buying 1,000 shares. They are buying millions of shares. And to buy a millions of shares, you are buying on every fall, so that your average becomes somewhere right here. Although you are buying it from here till here, your average will be here. So you won't have to worry about it. And once it rose up, you will have a higher chance. And now, as you can see, the moving average turning down. So this is where they will be selling. Now, they won't be selling everything on this day. They will be selling it equally on all the candles. Sometimes lower, sometimes higher. Now, this is a 4-hourly chart, intraday chart. This is O for open, H for high, L for low, C for close. This is the OBV number. Now, let me tell you the technique in detail in terms of intraday charts. Now, as you can see, if I make it big, that the OBV is really nearer to crossing it. So we will wait one day, and once it crosses it, we will be buying it. So right here at 105.49, that's 105.49. Now, basically, we will now sit on the sideline and see how our trade goes. It continues to go up and continues to go up. Now, let me show you one thing. Now, this low is our major low. Always remember this. Whenever a price or a OBV have risen up, the major low stands a bit few days before or current time. So these two are our major lows. If it breaks this, we will be selling it. Now, if you look at it, it's a descending chart. Let me show you. First of all, let me put it this way. This is a major end. It reached here, fell off, it reached here, fell off. So we know that the resistance is here. If you put a trend line, this trend goes lower. So it tells us that the fall is coming. Now another mark is this low. It is breaking this low, which was its second high and fall and then rose up. So if it is breaking it right here, it's a term to sell. So you'll be selling it right here. You bought it at 105. Yeah, right here, 105.49, and you sold it at 107.48. Now the market falls off and then rises up again. Now let me make it big. Now you can see it's rising up again. It broke this low, but now it's going up again. So this tells you that although it did break the low, it should have gone lower, but it didn't went lower. The volume picked up and the OBV has started to go up. If you look at it here, right here on the volume, you're seeing that the volume started to inch up above the moving average. Now, whenever it inches above the moving average, then over the next few days, the moving average will start to move up. Example, this green or red number is according to the bar, and this black line is the moving average. This black number is the moving average. So right here, the moving average was 11.47. It went lower to 11.08, but it is now coming back up. So it tells you that something strange is going on. It broke the low right here. Let me make it big, this low. So it should have gone lower. but it has come back up. So you should be vigilant to buy it again. Now this is a really excellent technique that works on daily chart, intraday chart, on all charts, and you should always be using it, always be remembering it, because you can see it broke this low, the major low, so it should have gone lower, but it's now coming back up. So we'll sit on the sideline, and as you can see from our line, it is now going down again, and it has broken the low again. And now it's getting back up with price rising extremely high. Now on this day 112.55 we will buy. Why? Because it has crossed this line. So it tells us that the new bull run has started. Now as you can see, this line is providing support as well, right here, right here. And now it's rising up. Now if you look at it, if I make it big, and right here, this is also an important line for the next fall, because this is first high, this is the second high on the same line. Now as you can see, the price is moving straight, and now it's going lower. Now you might be thinking what to do now. Now once it broke this low, the major low, this is a selling point. This low was an important one. It broke it right here. So we could have sold it at 111.96, that is 112. But even if you didn't sold it, it's not a problem. Why? Because it eventually came back up at the same rate. Why did it came back up? Because it made a too low normal triangle up. So you would have made money right here at 111.66. Now another important point, these lines. Always remember, the previous low is the first major important stuff to note. If it breaks that, sell it. Second important thing, these lines provide support, but don't buy on them if they provide the support. Wait for it. Now right here, you can see this as a major high. It has broken, gone lower, but this is the major high that is important. If it breaks this, we will be buying it again. Right here, it has broken it up. So we will be buying it again at 111.81. Now you might be seeing that it is going lower, and you might be saying that we will be selling here. No, we will be selling here, because this is a rule. You don't pick the last low of a falling trend. Right now it's not a rising trend. Why am I saying it's not a rising trend? Let's move a bit more days so that I can inform you why. Now it's rising up. Let me zoom out to show you. If you look at it, the first major low was this low is lower and this low is higher. So it tells us that the rise is coming up, and it rose eventually. If I would have bought it right here somewhere, and we did bought it right here somewhere, we bought it on this day, but if you would have bought it right here somewhere, it was 104. It rose, and then this was the second high, 111. But now it is making again the same double lows. It made the double lows right here. This is the first low, second low, and a long trend came back up. And now this is the first low, this is the second low. Again the long-term trend is coming up. So this is a place to buy. And then you can see it rises up. makes newer highs. So this is the learning point. Now, again you can look at it that the price is stuck right here, or right here. Now stuck usually means not a good thing. But in an OBV, what really happens is, if you look at it, the price here was 115, but right here it's 120. And eventually it crosses up again. So the stuck period is not that bad if you consider it that the price usually rises in that stuck period. So it will eventually give you profits. Now, again you can see this is the high and this is the low. So again it looks to be in a stuck period. Again this is the high, this is the low. Again stuck period, but if you look at the price, this was 136.69, this was 144. So the price rises in those stuck period. But stuck periods are to be like something to be of vigilant. Example right here. The price has gone lower. So if you ask me, I will be selling it because the stuck period is now not breaking on the up. It's breaking on the lower lines. Example right here or right here. This line is important. So either you sell it today at 141 or right here at 140.68. Now the thing to note, let me zoom out. It is now again breaking the low on the lower side. Now we again need these kind of two lows up. If you look at it, this is the same thing as well. These two lows. Although this is a bit lower, but it tells you that this was made to make people trade on the wrong end. This is a false move that I say. They make it break, but it comes back up. Now, although it doesn't look these two low doesn't look like these two low, so you can buy it once it goes up. Otherwise, if it is falling like this, you will wait for this kind of stuff. Two lows, like going up. If I make a trend line, I will be able to better make you learn. Right here, see, these lows represent a rising trend line. These two lows represents a rising trend line. Now it's falling, right? So you'll sit on the sideline to see those two lows again. Now if you look at it, this was a too low, but it has broken on the lower side. So I won't be buying it right here. But once it crosses the high, so I will be buying it on this day at 148.53. And then eventually it goes up. And we will sit on it for the rest of the period. But once it again breaks the low, right here, we would be selling it. Now if you remember, we bought it at 148, but now it's 146 because it has opened lower. Now whenever it opens lower, you can expect it to come back to 48 levels, 48.80 levels. But if it doesn't, then always remember, if it falls from here and makes a second high, then this tells that it is going further lower. So always, if you are in loss, book the loss because this is not a good sign. And eventually it goes lower, if I am right. No, it goes straight. Now if it is going straight, then this is a good sign that consolidation is happening and someone is buying. But eventually if you look at it, it's breaking on the lower side. Although the price is going straight, But this is not a place to like take a risk. So this is how you trade the intraday level. Now you can see the price is rising now on the top again. And if you look at it here, it's again making the two lows right here. So if it crosses this high, we will be buying it again. But it did it. It's now going lower. Now on this low, you can see it's again making a longer term double lows. See? Now if you look at it, this low is exact the same. It's not the highest low where we made the trend line like this. These two lows are not that like that. So we'll stay on the sideline, and once it breaks the high right here, it did. So we'll be buying it again. Right here, 157. But always remember, if it opens with such a gap, never ever buy. Miss the rally. Let the rally pass. Don't make money, because this is a trap. Always remember, such a high opening, it's always a trap. So I won't recommend you to make money on it. And if you look at it from here till here, no one made money. It just went straight. Again it came back lower. So it's not a good moment to like stay on. Now you could have bought it right here again, 160. But my point is, this is a trap. Apple is a good company, so on this trap, it was not that bad. But always remember, don't fall for that. If it opens lower, then even it's a trap. If you're shorting it, don't short it here. Try to short it here. The same thing happened on Apple. So this is the learning part. Now let me make it big and show you how it went by. Now if you look at it, the real thing, two lows up, two lows up. This is also a kind of two lows, but it's really nearer and it's a bit lower. This second low is lower. This is again the two lows, but it's on the same levels. So on this kind of stuff and this kind of stuff, you'll be always buying once it crosses the high. Now eventually it goes up and it is going straight. Now the thing that I want to tell you, this is the high, this is the high. Now as the two lows on the bottom was saying it's a good stock. So the two highs, let me zoom out. So the two highs right here, like a jewelry, a woman's jewelry, like you can see it's saying that it will go down. If the two lows going like this tells you that it's a good moment, then with such a gap, that is, this is June 5 June 2017 and this is August 29, that is 2-month gap, and it goes straight up and doesn't rise up but comes back down. This is a trap. This is the OBV trap. And you might ask me, how do I know that? Just look at the volume. Volume went up, went lower, went high. But if you look at it, its moving average is making lower lows, lower highs. See? This is the highest point, this is the lowest point, this is the lowest point. Now if you remember, this, like these three are lows, are lower highs. And then if you look at the volume, it's also highest point, second highest point, third highest point, and fourth is the same. And then eventually the volume is going lower. The trend is going lower. Now this is not a good thing. And if the OBV is also making like this, a round cup, bad signals. because as we are considering on the opposite side that if it is making higher lows, it's good. So on the top side, if it is making exact highs and falling off, this is not a good trend. You always want the price to rise up. You always want the OBV to be rising up, not to get stuck at the same highs. And if it is making such a gap and falling off, and this is not right. Now let's see what happens next. It eventually falls off and breaks this low, the major lows. Bad. It's going down. This is the next big low, this low. It has now broken that. And here the price ends on today. Now if you look at it, the same two highs that we discussed right here, it's now falling off. And it is not a good sign right now. So always remember this. If it made two lows right here and we were thinking of it going up, then it should not have got stuck here. It should have gone higher. As it happened right here. It crossed it, went straight and went higher. That's what we needed right here. But it didn't. Now if you look at it here, it crossed this line and made higher highs. And then eventually went straight. But if you look at it here, it just crossed it and went lower. Broke the previous low on the short term basis and went lower. But if you look at it here, it eventually went straight. It did broke, but it went up and made a higher lows. Right here, let me make it the trend line for you. I mean this. If you look at it, the trend line is again going up. But right here, there is no trend line going up. It's only coming down. Let me show you. Right here. It's coming down. Now if it is pointing downwards, then the price will also point downward. Example, right here. It's pointing downward, but once it made the two lows, it went up. Example, right here. The price was pointing downward. But once it made the two lows, it went up. So this is the learning point that will make you tons of money. But remember, the loopholes that I told you are really important. They can make you trap. Now if you look at it, right here it opened higher and I told you not to buy. And eventually, it never crossed up. Eventually, it is saying that it is going to fall off. So this opening higher is a bad signal in trading. Now you might say it opened higher and went up. It was a good thing. Yes, you're right. But let me show you. The two lows were already made. So opening higher right here was not that bad because people had already bought it right here on this level, on these levels. But right here, this is the place where the double, it opened gap up. It was the two lows. So rather than people buying on the uptrend, it opened gap up. So basically it wanted people to trap. So it told them to buy it right here. And eventually people bought it because they thought that the rally is coming up, but it was a fake. It was a fluke. That's why always remember, a gap up is a dangerous thing. And you can eventually look at OBV. So if it has made a double low earlier and then it opened a gap up right here, then it's not that bad. But if it has made the double low and the uptrend was never there, it just opened up. This is a trap because once the people should have bought, at the time the people should have bought, they opened it gap up. So they didn't let the people bought it at 150. They let them bought it at 157, 158, 160. So this is a huge gap. $10 gap means 6 to 8% gap. So why would they not let people eat those 6%? Because they know it's a game over. So I believe Apple is now stuck or it will go lower.